The US economy added 178,000 jobs, crushing expectations of 65,000. The unemployment rate also came in lower than expected. Is this a bullish catalyst for Bitcoin? In today's video, we'll be talking about this, going over the most recent Bitcoin price action, and taking you through what could be happening next. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. So we can see here that in March, we added 178,000 jobs. Now, why is this not bullish? It just makes it even more difficult to cut rates. The reason being, inflation still remains sticky, and therefore, I don't actually think that this is the most bullish catalyst. It's almost like good news is bad news at this point in time with this market. Something else we need to consider is the fact that the US lost 133,000 jobs in February, not the 92,000 they had initially reported. So they revised it down again by another 41,000, which technically makes it the biggest monthly job loss since December of 2020. So things still aren't looking too great. I'm giving you the objective view of the market. At this point in time, we can see that Bitcoin is currently hovering just below $67,000. In yesterday's video, we were at $66,000. The video before, we were at $68,000. Not much is changing. My stance on the market remains exactly the same. And from a lower time frame technical perspective, we can see here that Bitcoin is essentially between the value area low and the point of control of this existing range. The point of control is right here at this turquoise line, just below $67,000, and the value area low is found just above $66,000. So until we can get any kind of confirmed breaks to either direction, I'm not willing to call any kind of new price action for Bitcoin. My higher time frame bias remains the same. We still see a pretty aggressive trend to the downside. We have this trend within the existing range on the 4-hour time frame where 76,000 acted as resistance. Then we had a bit of chopping around just below $72,000, and then we actually got a little bit of a fake out more recently above $69,000, which ultimately sent Bitcoin lower. Now, there is something we need to consider. This range can continue for quite some time. I know I've been vocal about talking about how Bitcoin would likely go sub $60,000 this year. I still firmly believe that to be true, but we might need to be patient because these ranges have a way of shaking out both bulls and bears. And as you know, more recently, I am a bear in this market. So my short positions are still looking quite solid. I'm up around 230K on my trades. I'm not just shorting Bitcoin, but other altcoins as well, which was shared in my group. But look, the trend is the same. And until we can actually reclaim some key levels, for example, higher time frame closes above $72,000 and above the tariff capitulation lows, which is above $74,000, I'm not willing to say that we're going to get another big move to the upside. And let me try to show you exactly why that is. We're seeing again, a repeat of the previous range. I have to be honest though, it would be pretty crazy if the market makers just allow this to play out as it did last time. It's almost too perfect. You can see that we broke down from the range, we grabbed some liquidity, we retested the bottom of this range, this support, and then we came crashing down. Right now, what you're seeing is a retest of the bottom of the range, similar to what happened when Bitcoin dropped from $97,000 all the way down to 60K. So let's see how the price action develops, but at this point in time, it's still very clear to me that we do have a ways to go to establish the bear market bottom for Bitcoin, which is something I wanted to bring to your attention in this video as well. If we take a look at this chart by Killa, who's a great analyst as well, you'll notice that Binance whales have stacked bids from $62,000 down to $40K. Now, what this essentially means is there are some buy orders ready to accumulate Bitcoin at those levels. And I wouldn't necessarily agree with this assessment of saying 100% without a question, this will be the bottom. However, it does make a very convincing case for the bottom to be at the bare minimum around that range, which could see Bitcoin go as low as $40,000, where we have a big portion of those bids. So if we take a look at this chart, which I've constantly discussed on the channel, which is where I would personally be accumulating Bitcoin, you'll notice that we are getting close to my initial spot accumulation zone, which is sub $60,000. The moment we start going below there, I will personally start dollar cost averaging into Bitcoin with 15% of my cash position that is set aside to be allocated towards Bitcoin. Then, if we end up going lower and, for example, we break that 49K low, which I do think is a high probability scenario, I will start deploying even more aggressively. But this could take a while to play out. Let's be real. Bitcoin has a way of chopping out both sides of the market, and if you're not a trader as I am, well, you can basically just sit on your hands. In my opinion, of course, this is not financial advice. Nothing that I discuss on the channel should be construed as financial advice. I have the full disclaimer in the description down below, and right now, it's important to just be patient, especially from a spot portfolio perspective. Now, from a trading perspective, still leaning short, still think Bitcoin will likely break down, but will need to be patient. And I also wanted to bring this to your attention, the Bitcoin exchange liquidation map. You can see that on the 7-day time frame, there is more cumulative long liquidation leverage in the market compared to cumulative short liquidation leverage in the market, but it's not that significant. So if we take a look at the 30-day time frame, it does paint a little bit of a different picture where there is more cumulative short liquidation leverage in the market compared to cumulative long liquidation leverage in the market. So what this means is there is a scenario where Bitcoin essentially sweeps up this low just below $65,000, gets another bounce, we grab some upside liquidity, and then we ultimately move lower. That is perfectly feasible in this kind of market. I just need to warn you. But if we take a look at the liquidity on the 24-hour time frame, you can see that there's tons of liquidity from 67 all the way up to around 68K. But there is also tons of liquidity right below our current prices, around 66,000 down to around 65,000. Something for you to consider with the war escalations over the course of the weekend, with also the long weekend and the stock market being closed, we should be expecting a decent amount of volatility in the crypto market. And as it pertains to war escalations, we'll have to see what comes out of this weekend, but you can see here that just recently US officials confirmed that a fighter jet has been shot down over Iran and the condition of the 2 pilots aboard is unknown. So these escalations are indeed continuing, but no one really knows what's going to come out of this. The last thing I want to discuss in today's very quick video is the fact that the US household exposure to the stock market has hit record highs. Now, the reason why this is very important for you to consider is the fact that the last time the US household equity exposure hit a record high, it was in 1968 at 22%. What followed was the S&P 500 peaking late 1968, entering a secular bear market down around 48% nominally by 1974. Real returns stayed poor through stagflation until the early 1980s bull market. Now, it doesn't necessarily have to be this bad, but it is something for you to consider. So at this point in time, if stocks can continue to rally, it makes sense to believe that Bitcoin can get a little bit of a move to the upside, ideally grabbing some of that liquidity that we highlighted in today's video. However, if it plays out similarly to what happened when we created those tariff capitulation lows back in April of last year, well, that could be enough for Bitcoin to go sub $60,000. So on the higher time frame, I apologize for repeating myself, but nothing has changed. I'm simply waiting for lower levels to start dollar cost averaging into Bitcoin, but from a trading perspective, I am happy to maintain my shorts, which are currently up 6 figures. By the way, if you want to know how I'm trading the market, whether we go up or down, you do have the first link in my description down below. If you DM me the keyword CBM on Telegram, you'll be able to join my private group where I share all of my own personal trades. The group is free. You just have to trade with your own capital after signing up with one of the affiliate exchange links down below. I would recommend that you check out 2bit, which is one of my go-to exchanges at the moment. I also really do love trading on Bluffin, which is where you can see most of my trades are currently open. And that sums up today's quick video. A lot of people are currently celebrating that the US added 178,000 jobs to the economy. However, if inflation remains sticky, this just pushes rate cuts even further. Now, I'm still expecting Bitcoin to do the exact same thing this year. We may need to be patient for us to go sub $60,000 and start entering those deep discounted zones. Speaking of which, we also highlighted the fact that Bitcoin has a bunch of bids stacked down to $40,000, which makes the case for a potential bear market bottom this year. If you enjoyed the content, make sure to smash that like button and subscribe. As always, I have my bluff and leverage trading tutorial right here. Have a lovely weekend, and I'll see you in the next video.